So joining us is Muhammed Demir, Turkish national, now working in London's financial district as the head of capital markets with Swiss Finance Corporation. Muhammed, great to see you. Thanks so much for coming on.
Hi, Paul. Thank you.
Muhammed, we have a lira down 40% on the dollar for the year. We have a Turkish stock market in free fall. How are your friends and family in Turkey feeling?
Well, everyone is frustrated, obviously, with the huge volatility, especially in the currency. The companies cannot foresee the exchange rate to be able to import and export, and especially daily life has had a huge impact. Like if you want to buy anything, any staple food or goods, it's literally changing day by day. As you know, the exchange rate is changing almost 5 to 10% every day for the last couple of weeks.
So on that point, how are people doing business? Are they moving on to dollars? Are they using other ways to do long-term contracts, or?
Actually, Turkey is used to high inflation, especially a couple of decades ago. But still, it's not helping the business because Apple had to stop their sales after the huge, currency depreciation. And then, as you know, we've seen some appreciation yesterday, which is almost 20–25%. So when it comes to business, you will have to, agree on a price, and it would be the local currency if you're just doing business in that country. But if you know that you're buying or selling the goods that are based on US dollars, especially for technological, consumer goods and other import materials like raw materials, then you cannot just pin it down. You don't know how much it will cost. You may make a lot of money or lose a lot of money depending on where the exchange rate is.
It sounds impossible to do business. And you mentioned appreciating yesterday was on the president's new plan. Are you confident the plan can stem some of these losses?
Well, actually, what has been announced was a free call option on US dollar Turkish lira pair. The president is asking everyone to convert the US dollars into Turkish lira and put it in the banks as deposits. And the government will compensate anyone who would have a potential loss due to currency exchange rate moves. Basically, that is a free call option for you. What you would do is obviously you would just convert your US dollars to Turkish liras, put it in the bank. And if the currency yield is higher than the interest rate yield, so then you would just go and get that higher yield. But normally there is no free option anywhere in the world or in financial system. Everything will come with its costs.
So what do you think in order to make Turkish people whole, if this is the option they take? Are they going to have to print more money to actually do this?
I mean, because they're going to pay in Turkish liras, there is no default risk. It's just like the treasuries, like US government can always pay their debt because they can just print more money. But then the question becomes, like, what would happen? Whether, the currency exchange rate will go down, the Turkish lira will appreciate or depreciate. If it appreciates, it's amazing. The country will just get out of all of this mayhem suddenly, and the life will be more stable. Daily life, the business life, everything will be more stable. But God forbid, if the exchange rate doesn't go down, what are you going to do? You're going to pay people for their potential losses because you gave them a free option. That means you need to print more money. If you print more money, then you would depreciate the currency further. And because you depreciated the currency further, you would have to pay the other people more money. Then it will just go in this, snowball effect. Then instead of, trying to save US dollar Turkish lira rate to going to, 20s, you may end up at 40s, 50s, or 100s. So I think it's a big bet. And I don't understand the rationale behind it. I think it's a little bit, about the advisors of the, president telling him, very practical stuff like this. But, the monetary policy is not like driving a car. It's like, controlling a spaceship. You need to be very careful. There are very sensitive, devices over there, sensors over there, and you need to think ahead, and every action that you take has a huge impact in the coming months or years. So I think that's a big, big bet. It's like going all in a poker table, basically.
Why is it? Because we see ultra loose monetary policy all around the world. Why do you think Turkey has felt such a bad effect so fast?
Well, ultra loose monetary policy is viable whenever you have low inflation rates. If you look at Europe, UK, or US, or Japan, for that example, they all have very low inflation rates. So when you have low inflation rates, that's totally fine, because then the liquidity in the market is not having any impact on the general daily life. But when the inflation starts going up and starts getting out of hand, just like it happened in US recently, we've seen inflation levels close to 7%. Then what did we do? We just suddenly said, okay, we are stopping loose monetary policy now. We're going to start tapering. Oh, okay, we're going to taper quicker, and we are going to increase interest rates in the coming years just to tackle this problem. But Turkey already had a problem with inflation. If you go and decrease the rates below the inflation rate in a way that the real return is too negative, it's basic mathematics. What would happen is, let's say you have 14% interest rates, right? Central bank interest rates. But if you go to the bond market, the government treasuries, it is trading at 22%. So there's a kind of arbitrage over there, okay? People would use this, banks will use this. Secondly, if I know that the inflation rate will be 50%, and the cost of borrowing a loan from the bank is 14%, I would only do this. I would just go borrow 1 million Turkish liras from the bank. I would just go and buy whatever I can buy. Say it, sugar, say it, coffee, whatever you can buy. And I know that in a year's time, I will pay back 1,140,000 Turkish liras, whereas I know that the goods that I bought would be worth 1.5 million. So it will push people to stock goods that are necessary for, daily regular life.
Are we seeing this in Turkey?
Yes, it's happening in Turkey already. The car dealers are not putting all their cars out there because they know that it's going to be more expensive next month and the next month. And all the basic goods, it could be anything, like from sugar to, gasoline to whatever you can think of. If I wait a little bit further, I will sell it for higher. Why would I sell it now? That is the problem with the high inflation. Turkey was used to be in this situation, but in the previous decade, they were doing great. They just took the inflation almost to single digits, and the interest rates were going well. The GDP per capita was increasing, but everything went down south after around 2013.
A warning, I think, for the rest of the world. Muhammed Demir, Swiss Finance Corporation. Appreciate it. Thank you. Merry Christmas.
Thanks a lot. Merry Christmas and Happy New Year. Bye-bye.